The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. My name is Matthew McCora. I'll be your host for today's event. We're going to be talking about how to stack profits using a mathematical formula to not only determine the best entry, but also, I think most importantly, is to how to manage the profit and risk management side of things. So we're going to be talking about a lot of key details. I highly encourage you to take notes. I'll be showing every piece of the puzzle. I believe in full transparency, of course. And so ultimately, I want to make sure that you can walk away with actionable tactics, okay, things that you can apply to your very next trade if you decide to do so. All right, so ultimately, I'm going to be sharing my camera as well, so you can put a face to the voice. And then as the next round of people are getting logged in, we will begin right now. So 12:01. So we let some people just takes a few minutes to get logged in. So at this point, we're going to start so we can maximize the full time with us. Now, this is going to be every bit of 90 minutes or more, so I'll make sure I get to the meat of the event in an hour and 15 minutes. And then, of course, any time beyond that will be bonus time. That'll be based on, any existing questions that I've yet to answer. We can go through all sorts of different strategies and examples to make sure that what we're here to learn is actually taught and taken in on your end. All right, so that's going to be the goal. So at this point, let's go ahead and begin. I'm going to now share my computer camera and make sure that everything's working properly there. I'm going to ask for just a some brief help here just to make sure that we've got a good system check. So at this point, you should see a slide that says sound check. You should also see a slide that says sound check with that question section below. Okay, so the question section is what we use to communicate back and forth. I obviously have control of the audio and the video. And then, of course, you can communicate with me using that very question section. Now, it's private. We do that intentionally to ensure that any private questions are kept private. People put in their phone numbers, people put in their, even home addresses at times. I never ask for the address, but hey, some people get a little overzealous and put all their information in when it comes down to enrolling in what's called the rapid profit method, which is actually a program. But that'll be more towards the end of this. My main goal is to teach, it's to empower. And then if you like what you see, you can always do more with me and the team here at Concordia Financial Exchange. All right. So it looks like everything's up and running. We've got John, appreciate it. Brian, thank you. Thanks for letting me know that everything's working. JR, appreciate it. If you have a trader in your name, I appreciate it that you're a trader. I am as well, but it helps if you want a personalized reply that you include your first name. And that's only if you have a trader. If you don't have your first name registered for this event, all I see is trader. Okay, so I want to make sure that I'm not ignoring you. It's just I don't want to yell out a bunch of trader names. So Elton, appreciate it. Thank you, Chica, appreciate it. And it looks like the rest of everyone else is good to go as far as the audio and video. So at any point, if you have a question, don't wait on me. Feel free to ask away. I have a set agenda, but my main agenda is to make sure that you walk away with exactly what you signed up for, which is a profit stacking method. Okay, that's what we're going to describe today for you. So ultimately, ask away. Every great question is one that you ask. Any bad question is the one you leave with, right? I'm live with you. It's 12:04. I'm not a robot. I'm not an AI generated human being here. So let's make sure that we take full advantage of it. So you won't interrupt me, so feel free, fire away. Now, for those that have yet to be in a financial event like this, that haven't seen me host before, many of you I recognize already based on the attendee list, but I've been in this industry since 2007. I've carried all sorts of different titles. I've worn different types of badges, and my largest role I played in this industry was as a chief revenue officer for one of the largest financial education and trading technology companies. The what I think is important about the 2007 start time for me personally is that was one of the last great recessions that we experienced. So that's when I learned my chops of technical analysis, forecasting, chart movements, was during those first few years of my career, 07, 08, and of course 2009. So fast forward 15 years later, we're back in similar pattern type, similar market conditions, though every bear market like we've experienced is different, is unique. You know, they have their own tendencies, their own reasons for being where we are. A lot of that same basic understanding of bearish market trends, bear bounces, corrections, reversal points, typically follow through, right? And so that's what we're going to be sharing with you all today. Now, I believe in momentum trading. So what you're going to see today is a step-by-step process of how to, number one, identify trend. We got to know if we're buying or selling, if it's going up or going down. And then we're also going to leverage volume as a key process to determining when a stock's about to move, be it up or down. Now, you're going to see something that's very simple. I'm going to be sharing exactly how I set up my charts. I use TradingView as my charting software of preference. You can use whatever you like. But you will see me use TradingView as my main source of chart analysis. Right now, there's free versions of that. If you don't have a charting software, or if you're open to trying something new, I'm going to drop a link. This is my direct TradingView link there, so you can test it out. I've used the free account for the majority of my analysis, so I'll show you that here in a few minutes. So we're going to be walking through this journey together. The number one goal you're going to see and process is that it's going to be fully transparent. I have nothing hidden behind passwords. You know, I don't have any process left unshared here. Okay, you're going to be able to see exactly how I go through the market. Now, I do have to share this. Trading in the financial markets carries risk. Okay, this is the same disclaimer that you've seen in every financial presentation out there. Is we have to let you know that trading in the financial markets carries risk. That means you can lose all of your account, and you can lose individual trades, and you can also win. Okay, so you can make money, you can lose money. So make sure that you only use risk capital, right? That means money that you can lose and still put food on the table and keep a roof over your head. That's a simple definition of what risk capital is. All right. So at this point, now that we got through some of this stuff, let's, the housekeeping items. What we're going to do is I'm going to walk you through a simple focus. Okay. So we're going to be thinking about this. I want you to think about simple and repeatable steps to trading. I try to make this as simple as possible. That does not mean I believe it's easy to do what we're going to do today. My goal is to make it simple and repeatable as possible for you. My goal is to pass on the knowledge that I've acquired through my 15 years of experience, and also my experience in working with thousands and thousands of traders, from first-time traders to seasoned investors, for those with a little bit of money, those with a lot of money. Okay, I'm going to try to give you all that I have today. I always strive to give my best, and I appreciate that of you as well. Okay, so let's just try our best as a group, and that's how we can get better than we were yesterday, right? Now, the tools I'm going to share with you make money. I'm going to show you results, recent results of trading opportunities using the strategies that we deploy today. I'm going to talk about stock trades. I'm going to talk about how to deploy options, both long calls, long puts. We're going to talk about if the conditions are right, things like covered calls. Okay, so in the money, out of the money, at the money options, right? We're going to let the market dictate what opportunity is available. And then the strategy we deploy is usable no matter what type of condition we're in. Okay, so that's going to be some of the benefits. So it's all about how do we increase our profits in a safe and consistent manner. Okay, that's going to be the focus. So the software here is TradingView. I'm going to give you everything that we need to get set up. I don't like to spend a lot of time on PowerPoints. This is probably the most you'll see me in a actual PowerPoint slide for this event. So we're going to jump over to the charts at this point. Now, at this stage, I want everyone to type in yes if you can see charts in the background. You should now see charts. I want to make sure everything's working properly. I appreciate it, Ronnie. Thank you. Thank you, John. Elton. Okay, perfect. Good. So everything's dialed in and looking good. Perfect. All right. So the first thing we're going to break down. Okay. Let's just take a look at where we are now. And I'm going to start off with just getting a sense of what's happening in the big overall market. So the way I like to break down the market is into really three levels. There's a 30,000 foot view. Okay. Then there's a 10,000 foot view. And then there's the ground floor. Okay. There's the ground level. So in essence, what we try to do is to align the top down direction of the market. Okay. So 30,000 foot, we're going to break down to 10,000 foot. Simple analogy of, flying in a plane, right? Then you have your ground floor. This is the focus. So how we do that is 30,000 foot view. We want to know what's happening with the S&P 500 and then the NASDAQ 100. Okay. So those are the two symbols. There's four in total I look at, but for today, it's the SPY, that's the S&P 500, and then you have the NASDAQ 100. Those are some of the two most popular indexes, the ETFs, that you hear all the talking heads talk about. Now, below that, you have ETF sectors. Okay, so this is another subset, another way to drill down is to understand what's happening on the sector level. Okay, so sectors, think about energy as a sector, consumer staples, you have consumer discretionary, utilities, finance. There's a whole list of sector-based stocks. So stocks, common stocks, are classified, is what it's really known as. So they're classified in certain buckets. That's where you get sectors, is because they're like stocks. They're operating the same type of business. Okay, so that's another subset level down. And then ground floor is, of course, individual stocks. Okay, so that's the essence of a top-down approach, and it doesn't take long to get this. Okay, it's not like we got to spend hours and hours and hours analyzing what's happening on each level to get down, because effectively what we're trying to do is we're trying to get as many variables on our side as possible. So before we talk about making profits, we have to understand where we're at. Okay, so what stage of the market are we at this moment? Now, I say market, it's basically what type of trend are we in? See, each trend has stages. You have the pre-trend, right? So that's the point of a reversal, meaning we're going down, now we're going up, or we're going up, now we're going down. Okay, so that's that pre-trend. It's a reversal point. Then we have an active trend, meaning we are either extending or we are retracing. Okay, so the market's either creating higher highs or lower lows. Okay, that's a downtrend, right? You could also be retracing in an active trend, meaning we are up, now we're coming down, looking for the next wave back up again. Okay, then of course you flip that upside down. That's the other side, it's the downtrend. Then you have the end of the trend. Okay, so if you think about the terms of it's about to go, it's going, and it's gone. That's what each trend stage is all about. So by using some simple tools, now in the top left corner, some of you have probably already jumped ahead and have seen that I've got 4 indicators on the charts. So in the top left corner here, you'll see where it says MA, 1D, and a 10. Then you'll see the same thing below with a 20. Same thing below that with a 50. Okay, those are moving averages. They're not exponential, they're not weighted, they're simple moving averages. The 10 means that we're averaging the last 10 days worth of price action and generating an average price. So that's a 10-day trend. The 20 represents a 20-day trend. The 50 represents a 50-day trend. So the combination of all 3 of these give us a quick, easy to read, easy to understand trend direction pattern. Now, I can chart with the best of them. I spent well over a decade learning the craft of being a master chartist. Now, as a teacher of trends and market analysis, the difficulty in teaching someone how to use manually drawn trend lines is the fact that they're highly subjective. We can go into a room with 10 traders, 10 top-notch chartists. And it's amazing when that happens because I've done it before. I've been in this industry so long. I know many of the top traders that you've been involved with. some of you that have taught you, some of you have even used some of their programs. Been around a long time in this space. And even with all that experience, if we get 10 traders in a room, you'll see a 50-50 split of where the trend is, at what point are we at in a certain trend, right? So even that level of talent can have a different opinion, because that's what manual drawing trend lines is that it's highly subjective. Okay, what I try to be is objective, using math-based formulas that can repeat themselves and in essence be automatic for us. So the 10-20-50 model here, it's important to note, some of you have seen different types of patterns or different types of combinations. You know, another classic combination is like a 50-100-200. A 50-100-200. I use that as well, but that's more for long-term trading, also known as position trading, meaning I'm going to buy something today, I'm going to hold that for months and months and sometimes even years. Okay, so that's long-term trading. This model here, the 10-20-50, is mathematically derived, and it's all based on your hold time. So this particular setup of a 10-20-50 model will put you in trades, put you in swing patterns that typically last about 3 weeks. 3 weeks is the average that I see in trade time, hold time, right? Meaning I buy something today, within 3 weeks, I should be either at profit, exiting the trade, or I've been stopped out. Okay, that's that 3 week average. Sometimes it's days. You break out and you're done in a few days, and sometimes it takes about a month, right? But the average is about 3 weeks in this setup. So what you use here is very important, because it sets up the viewpoint or the swing pattern that we're trying to get into. So that's what this is, and there's all sorts of different combinations out there. What's most important about this is that it's a consistent approach. So I understand exactly what's happening at every level, and this is the same static level that I use no matter what time frame. Right now I'm on a daily chart, but if I'm on a weekly, if I'm on a monthly, I'm still looking at the same data. If I'm on a 1 hour chart, same thing, I'm looking at that data point on that 1 hour time frame. So everything's symbiotic. I don't have to learn a new method of determining trend. Robert, thank you for that. He says the profit stacker is back on the attack. Yep, roger that. All right, so let's start with trend. Okay, so this is the SPY, right? This is my 30,000 foot view. I want to know what's happening up top, so that way as I drill down into individual trades, I know what to expect. Just think about this for a second. If the SPY, the 30,000 foot view, is in an uptrend, if I then drill down into a specific sector, let's say energy, okay, and energy's in an uptrend, that means the collective basket of energy stocks, and then I find a stock that's an energy stock that's also in an uptrend, right? That's 3 large macro trend patterns in alignment with my individual trade. You see, that's adding more variables on our side, data points to help really boost up and create a breakout. Same thing happens on the opposite side. So the markets don't all trade in the same direction at the same time. So I'm going to get rid of the smaller time frames for a second. So right now it's a simple candlestick chart, and all I have as a trend is the 50-day. That's our longest term trend for swing traders. This is our long-term trend. It's about 2.5 months worth of an average price. And that's what really trend lines are. If I manually draw a trend line, or if I'm using, in this instance, a moving average, I'm using past price to set a trend. So as long as we're above this 50-day moving average, that means we're above the 50-day trend, right? That means we're in an uptrend. When we shift below the 50-day, that means we're going bearish. That means it's a downtrend. That means we're below the 50-day price. Now, this is the longest term trend. It's literally 50 days. You have the 20, you have the 10. They all give us something important, but I'm just going to show you the high level at 50. So when we're looking at what's happening at the S&P 500, for example, here, my first inclination is to know, okay, where are we at in relation to the 50-day trend? Now, I've got some other analysis here because I had a class earlier today, 8 o'clock to 10 o'clock this morning. So I've got some analysis already here lined up. But as you can see here, we had a strong rally off this low. This is June. Okay, this is that low as of right now. That is the lowest low. this at this point could be the bottom. So if we go back, fast forward 2 months, 3 months, 6 months from now, and we look back, this may be that point of that major low to get us up into the correction stage, okay? Meaning moving up and creating new higher highs. That's what everybody wants if you want to be bullish. Same thing happens if we come back in time here. This is the COVID shutdown. This is February 2020 here on the top, and this is that low. What's interesting about lows or bottoms is that you really never know until you're out of the bottom. Now, you're going to see today how we're usually about 5% beyond a low, okay, before we really get a confirmed bottom. Now, this is an absolute bottom, but there's bottoms or lows created in every type of trend, okay, meaning market goes up, sets a high. Market pulls back or retraces, sets a low. Then you have another high. Then you have another low. Then you have another high, right? That's an uptrend. Same thing on the downside, right? You have a lower low, then you pull back or retrace. You have an inside high, comes down and creates another low, right? That's a downtrend. But you never really know you have a low or a bottom in this instance until it's there, right? Same thing back here. You go to 2018. We have a bottom, we have a low, and then the market starts to recover and take out the previous highs, right? You come back to 07, 08, 09, same thing happens here, okay? So you never really know until you know. So what we do is we watch and monitor how the markets are reacting, prices reacting after these lows, okay? So that's number one. That's one of the magic questions every retail investor is trying to answer is that the bottom? Why is that important? Well, that sets support, right? That sets confidence to get into the market. At this point, type in an me, if you're actively trading today or in the last few weeks. How many of you are actively trading, actively analyzing, getting in, getting out of trades? I'm curious to know what the activity level here is. Type in a me if that is you. Yeah, we actually have quite a few. That's good. Wow. So we've got, let's see how many people we have. Let's do a informal poll. 174 people, almost 100, well, now about 180 people here. Robbie says, with a profit stacker as my guide. Yeah, so it looks like we've got, I don't know, looks like about 20%, 30%. There's a couple more me's coming in. So the question, if you missed it, was how many of you have traded in the last few weeks? You know, that's when I say active, a lot of people think of active as, oh, I'm scalping the market. I'm in every 5 minutes. I'm getting in, getting out. I'm talking about, have you placed a trade? Have you bought something? Or you could have shorted something, or you could have bought a put, or you could have bought a call. Maybe you did a covered call in the last few weeks. Yeah, so what's interesting about that fact is that, you know, retail activity and institutional trading is still somewhat active. The big bucket of volume that's not been around here, that's not been shown, is the hedge fund activity. In fact, there's a lot of hedge funds that are in short positions. So I think we're at historic highs for shorts from the hedge funds against the market. That's not always means it's bearish, okay? Because we know what happens to these hedge funds when they're wrong. Is that, you know, we found that out with GameStop, right? The short squeeze. Now, it doesn't necessarily mean that they're on the right side, okay? But it's just a fact. It's just a stat that's out there. So in actuality, the retail traders, the analysts call dumb money, believe it or not, right? These hedge fund traders, they tend to look to the retail as you and I as dumb money. Well, the benefits of us, one of the largest benefits that we have as retail traders is the fact that we can be nimble. You see, we don't have billions and billions of dollars to worry about. We don't have hundreds and thousands of investors relied upon us individually, right? We can shift. That ability to be nimble as we are, to be flexible, to switch directions, to switch strategies, is a huge benefit for us, right? So I think from the lessons of 07, 08, 09, many traders took a long time to get back into the market. And waiting that long or too long means you miss out on the bulk of the recovery, right? Because no matter if you're an active trader right? For me, an active trader, once again, is more, I would say in a week, you place at least one trade a week, right? Maybe 2 trades, every couple of weeks, right? But that's active, meaning you're analyzing, you're looking for opportunities, and then you're making transactions, right? I'm not talking about scalping. Okay, I'm not looking at 1-minute charts. To me, that's being active. So we can switch directions a lot easier. We can go to cash a lot easier than a $3 billion, $4 billion, $5 billion hedge fund, right? So that nimbleness is wildly important, and I think it's a huge asset for us. So ultimately, when we look to where we are right now, this low, because right now it's the absolute low that we have. It's our most recent low, which is in June, middle of June. From that low, we broke above this 50-day back on my birthday, actually, July 20th. Okay, that's my birthday. So once we broke across this level, right, from this high, we actually took out 2 major highs. We took out a high here, and then we basically topped out on this May 3rd high. You see that double top scenario. So these 2 points of inflection here, right, then created this pullback. So what every person is watching right now, if you have any insight to the market, is what's going to happen at this level. Now, from a trend perspective, we have flipped below this 50-day moving average. So from a simplistic standpoint, we look vertically. Where's the price in relation to the 50-day moving average? Well, it's below it. Okay, so we are in a downtrend category. That means we have flipped from an above the 50, which is meaning we're above the 50-day price, to now below it. But that's only one of the trend lines that we use. Now, that's not counting horizontal left to right. I'm going to show you that in a second. Just simply looking at trend, when I put all 3 on, think of the 10 as your short-term trend. That's your inner trend line. If you've been trained classically on trend lines, manually drawing them, okay, the blue line is your inner trend line. It's only 10 days, so it reacts a lot quicker to the current movements. Because I'm only looking at 10 days, it's taking just a small move, and it will reflect. If there's a big move, it's going to pick up faster in that average because it's an average. So 10 days closing price divided by 10 gives me the average price. Same thing for the 20. So as you can see, we're also below the 10-day. We're also below the 20-day. So that's 3 directional confirmations that we are in a downtrend. Now, looking at the angles, right? That's what trend lines give us. There's also horizontal left to right support and resistance, okay? But ultimately, to understand the direction, right? First step is always direction. And in fact, direction is the hardest part of trading, is determining when the market or when the chart is going up or when the chart's going to go down or is down. That's the hardest part. Believe me, thousands of traders I've worked with, that is the most difficult part of trading, is getting the direction right. So from a 30,000-foot view, the S&P 500 is in now a downtrend category. In fact, a 50-day moving average, if you listen to any financial talking heads out there, Fox Business, Bloomberg, CNBC, Yahoo Finance videos, right? They'll talk about the 50-day moving average. They'll also talk about the 100-day moving average. They'll also talk about the 200-day moving average. So it's a very relevant data point, and it's used frequently and often across the entire marketplace. So this setup is not unique and proprietary or individualized, because we want to be aligned with the big money. So the more we can use tools similar to what big money uses, the more aligned we will be, because that's our job. We're here to ride the piggybacks, right? We want piggyback rides. We want to follow the money, momentum. So now just understanding a simple look, and we'll go to the individual stocks here in a second. Good question. Do you trade options? I would say 80% of my trades are on options. So yes, trade lots of options. So good question. Thank you, Lewis. So the power of using this type of setup, a simple trend setup, is that we can quickly run through lots of charts. We don't have to sit here and draw and update our charts all the time. So let's go to the second largest one. 30,000-foot view is the NASDAQ, the Qs. You see, we're below the 50, 10, and 20, downtrend. Let's go to some of the big stocks like Meta. Are we uptrend or downtrend? Type in up or down. The goal of this is to be quick. up or down. Don't spend too much time. Just look vertically. Where is the price in relation to the trend lines? Now I'm going to get rid of these. It makes it even easier, right? Below is down, above is up. Yep, everyone's got it down. Let's go to Amazon. Oh, what's Amazon? I'm going to turn on my webcam for a second so we get a little bit more real estate here. I'll turn it back on in a moment. Yeah, there you go. Robert says it. Robert's a client of mine already, right? He says battling it out. Okay. Now, objectively, it's still above it. Now it looks to be right on the 50-day, but that is battling it out, right? So what are these trend lines? Remember, they're support and resistance. Trend lines, aka these moving averages, are being used as support and resistance. Support is under the price. That's what makes an uptrend. Uptrend means you have a lot of support of price holding up the value, okay? When you go below, like back here, this now flips it to resistance, okay? So it's pushing price away from us. So when we take a look here at where this is at a point of inflection. Okay, this is at a point of reference to say, okay, we are at a point where the bears and bulls are battling it out. So if we know this is support, right? Two things can happen here. Now I'm keeping this simple. We're just looking at the price versus the 50-day. We're bouncing right off it. Now, in fact, we've had 3 attempts to go lower than that 50-day. So if you look to that green bar here, you see how we wicked low. Now, if you don't know candlesticks, you have wicks, and then you have the body, candle bodies. So green simply means that we had the price closed above the open. That makes it green. That's bullish, right? And red means we close below the open. That makes it bearish. But what's important to note is, where do we close in relation to this? When you see the wicks penetrate and then come back up above it, right? That is a sign of the bulls holding support. Next day, we tried to wick low and take out the 50-day, couldn't do it. Okay, that was on Friday. Yesterday was a day off here in the States, of course. Markets were closed. So that puts us to today. Look at today. We've had wick lows, but look where the price is right now. We're battling up against this 50-day. So just because it comes to the 50 doesn't mean it's going to reverse and break. Okay. This fills this gap. This is a fill the gap method for those that were with me this morning in class of exactly what I was talking about as far as how the market likes to target gaps, right? That's a gap that was filled by this recent move here. See this gap, this distance here? That's a gap, and we fill the gap. So ultimately, we're still in an uptrend, but this is coming off a deep retracement. Okay, we'll talk about how to trade those in a second. Here's Microsoft, downtrend, right? Everybody picked that up again. Apple flipped to the bottom side. Okay, just like we saw Amazon battling a moment ago, look at Apple. That has closed now twice below. Okay, so that's now 2 days that have closed below that 50-day. That sets up more of a decisional move. Which way do you think the weight is? Is the weight down or up at this point? Where do you think the weight is? Think of where's the pressure, up or down? That's right, down, right? That's the I want you to start feeling that, not necessarily feeling like subjectiveness, but sensing where the pressure is to the downside. Now, if you want to follow 2 stocks, well, let's make it simpler than that. If you want to follow 1 stock and get a sense of what's happening in the greater market, all you have to do is follow Apple. There's a nugget for you. You want to know where the market's going? Follow Apple. I mean, $2.5 trillion market cap is a big impact. Okay, so that's the secret index is Apple. You want to know long-term horizon here for the greater market as a whole? Apple's the place to look. Okay, so Apple has now since broken down below. That's going to be important for us to think about. But the key here is that is the simplicity of just picking up trend. Let's not overdo it. Let's not spend too much time trying to overanalyze something. Let's just try to keep it as simple as possible. So type in some symbols that you're watching. Type in some symbols and I'll pull them up. Just one each. So you have a sense of randomness. I'm not cherry picking the top, traded stocks out there. This applies to anything, any symbol you can chart. I want us to think about trend, and then I'm going to give you momentum. Okay, I'm going to give you the momentum criteria. All right, so I'm going to do a whole list for this. So I'm going to create a watch this just for us. Trader picks. All right, let's load them up. We've got Moderna. Oh, no. You want Moderna or MNRA? AMD. Ooh, a lot of you like the semiconductors. We got Marvell Tech, another AMD. We got Tesla. We got Apple. We just went over that, but we'll go into more detail here in a second. All right, give me a couple more. A lot of you are duplicating the same ones. Give me a couple more here. Raytheon. Big defense stocks. We already have Marvell on the list. A lot of you like that. Semiconductors looks like. RTX. You got TEL and U. We got uranium, energy fuels. All right, perfect. Oh, TLT. All right, we got some. I like that. We got NOC. All right, we got TLT. All right, perfect. Oh, HD. Let's see, ATUS, Altice. All right, perfect. That's a good list. All right. Yeah, mRNA. Yeah, no worries. I figured what you're talking about. Moderna. All right, you all ready for this? NIO, car manufacturer, we like that. Let's go a couple more. Let's see. NTNX. What is that? Nutanix. All right, so check this out. Watch. AMD. Oh, downtrend. All right. Marvell, downtrend. Okay. Here's the 50. I know I've got other stuff here because these are common stocks that we look at. So I've got extra analysis here, but there's Marvell below, right? Down. Look at Tesla battling here. Support. So uptrend at a point of support for Tesla. We're going to dive into on how to trade these. Don't worry. I'm going to first start off with trend. We already talked about Apple. Just flipped below. So this now has this downward pressure. Downtrend. Raytheon, downtrend. TEL, better be an uptrend because that's a trade signal. So as you can see here, this is an example. So today's a class. I know I've hosted a lot of presentations in my career, a ton of them. I mean, I can't even count how many hours I've been in a live event like this. I mean, I probably don't want to. I'm creeping up there in age, as you can tell by my grades. So I like to do things differently. Okay, so this isn't something where I just show charts with no times, with no data other than, hey, that's, if we did this, you would have made this much money. What I like to do is actually walk through every step of the process. So I like to teach. Okay, so I like to teach. I like to empower. If you like what you see and you want more of what I'm teaching, because though I would hope I can teach everything in an hour and a half, the markets change so often, right? Conditions change that it takes more than just one and a half hour event to teach all the different ways to trade the markets. And I say all the ways, meaning all the different conditions we see. So what I offer, one of my services I offer is called the Rapid Profit Method, which is a trading signal and educational program. That's what you see here. You can see there's trade details. So I've got an entry order I've got a stop loss, there's a profit target here. And then you can see the option details here. So this was an actual signal that was sent out over the last couple of days here, right? So then people subscribe to this, then they receive signals based upon criteria that I'm teaching you today. So basically I go in and I run this strategy all the time, and then I send out my favorite pick, or sometimes picks plural. This is an example of what it looks like, full trade details. You know, what to trade, when to get in, how to get out, what the option is if you want to trade the option, what the limit price is, what the strike price is, what the expiration is. There's nothing to assume or guess, okay? So that's an example of a signal that I just sent out. This was sent out on, let's see, the 31st, okay? It's now live. That's what this is telling us, okay? But I'll go through that in a moment. That's not the first objective today. First objective is to teach, okay? So based on this chart, you know it's an uptrend because I sent a buy, right? It's a buy because the profit target's above, so that's an uptrend. This is another symbol. This is an active target. You see the profit target here. This is another signal that's active, but this is an uptrend. This is energy fuels. That's an uptrend, right? Look at the charts. Look at the trends. Northrop Grumman, defense stock, uptrend, right? We're above the 50. Now, TLT, downtrend. This is the 20-year treasury bond. So the lower this goes, the higher our interest rates are, especially in the mortgage business. Yep, that's the tell. That is the tell. You have Home Depot, okay, just crossed below. So what's wildly important is these crosses and when they happen, okay, that's a point of reversal happening, okay? That's where we ideally want to be, is these crossovers, okay? So I'm going to get into that in a second, because I just want you to first off understand direction. There's Altice, okay? No one's perfect. There's no absolutes in trading. This is a buy. This trade actually got stopped out back here, okay? We limited our exposure and got ourselves out back here, okay? Altice is now in a downtrend, okay? Flipped upside down. But that happens, right? How we manage our trades. Moderna, downtrend. Big moves in biotech, big moves down in healthcare. Okay, I'll show you how we find those. NIO, right? Downtrend. This is in the auto industry. Motor vehicles, okay? Consumer durable sector. See, downtrend. Very simple to switch around. Nutanix, uptrend, right? Look at this reversal point, right? So it doesn't matter what you look at. I mean, you can look at a 1-minute chart, 5-minute chart, monthly chart. You could look at stocks, ETFs, futures, Forex, cryptos, same trend breakdown. We're using a short-term, mid-term, long-term trend, and we're looking up and down the board on how the support levels or resistance levels are reacting against the current price, right? That's trend. So the next key step here is timing, right? That's one thing, you know, I watched one actual show on TV about the financial markets. Just one. It's a 1-hour show. And then I'll read other articles that catch my eye, okay, online. But most of the time I try to avoid any opinions other than objective driven data, okay? Data like I see on a chart. Simple reason why is that anytime we listen to someone, even me, okay, I will literally disclose, this is my personal commentary. This is my opinion on something. If I'm discussing labor markets, if I'm discussing the inflation rates, what can impact inflation, right? I'll actually disclose, okay, this is my personal commentary on this matter, right? If I get a question from my room, one of my traders will ask a question about my thoughts on the next federal fund target rate, right? Is it increase to what, decrease to what? I'll say here's my commentary on it, right? So I'll let you know this is opinion. It's not necessarily driven by a math formula, right? Well, much of the talking head shows out there are nothing more than commentary, right? They're opinions. And so what I like to do is avoid that scenario and focus in on data, okay? What's the most important piece of data? when it comes to trading. It's what's happening. Are people buying? Are people selling? Or are they not doing any of those two things, right? Because that's really the decisions being made, right? You're either buying, selling, or waiting. Those all tell a specific story, each one of those. If you're buying a stock, if you're buying Apple, are you negative towards the sentiment of Apple? If I buy Apple stock? No, you're buying it because you have a future expectation that the price is going to go up, right? Means the value is up. Make sense? I'm buying it, right? That is the actual transaction that's being, it's not an opinion. I could say, hey, maybe this is a good time to buy. Until I actually buy the stock, that becomes the point of transaction, right? That is the most convicted you can be. You bought something. Typically, you're buying something, so it goes up in price, right? I'm buying. I have a positive outlook. I'm buying now because I think it's going to go up. Well, if I'm selling Apple, that means I think it's going to go lower, right? That's the most important transaction. I made a decision. I decide to buy, I decide to sell, or I decide to say, look, I'm going to wait. I'm not sure if the price is going up. I'm not sure if the price is going down. I prefer to wait. That tells an important story as well. Now I'm talking individually. Now think of a collective whole. Think of a large group of people. Think about a large amount of money. If there's hundreds of millions of dollars on buy orders for Apple, the price is going to go up. If there's hundreds of millions of dollars being sold off of Apple, price is going to go down, right? And if there's no transactions happening, then what's going to happen to that price? It's not going to move much. That's the most simplistic. I get it. It is very simplistic, but that is the essence of how the financial markets work. It's all based upon buying and selling. There's a lot of buying and selling. There's either no buying and selling, right? It's like flat or there's volume, right? That tells a story. So ultimately, if we can take advantage of the most important data, that removes a lot of the subjectivity from the market. So how do we measure that? Well, the simplest way to measure that, let's just go to some of your picks. Let's go to Tesla. Down here is volume. This is actually one of the most important and I think most underutilized indicators for retail traders is volume. Volume is where it's at, right? Does anybody disagree or have a different thought on buying and selling what I wrote? Anybody disagree with that or have a difference of opinion, right? I mean, it's really the essence of how the markets work. You're buying, you're selling, you're waiting, right? That's really the most important data point that we can leverage. So by using this volume indicator, I've got it customized, but basically you put the volume, just simple volume, turn on the moving average. It's a 20-day moving average. So now what we're doing is we're using an average volume, which is not dollars. Okay, this volume is literally the number of transactions, shares being traded. That's what this number is. That's what the volume is. So the 20-day lines up with the 20-day middle moving average. So that way I've got a mean, I've got a middle point that aligns itself. So I'm looking at 20-day volume average below, and then I'm looking at the same 20-day middle average of price. Good question. Gene Mark says, how do I get the line? So click on the indicator below. Okay, you'll get this little window. Go to style, click style. Make sure this box is checked. That box needs to be checked. Then go to inputs and make sure it says 20. It's not a random moving average, right? The 20 matches up with the middle up top. Okay, that's how you do it. Now I've also got down here, this is a column. So go to style, it's a column. All right, so same essence we did with the moving averages up top. Same essence, meaning we're looking at an average math generated number. which is in the form of this line. Okay, so that's a rolling 20-day average of the daily volume. So for Apple, as we sit right now, the number to the right, so you see this box up here? See how the numbers change? That's the data box. So today's 20-day volume average is 65.89 million shares. That's the average. Today, we're sitting at 39 million. We're roughly about, what, 60%, 55%, somewhere along those lines of the average volume today so far. Now, the most of the volume comes in the morning, the opening session, opening bell, first hour or so of the day. So right now, being about 65%, we'd probably end up at the average today, okay, an average trading day. So there's two spectrums to volume. There's high, there's low. High volume is when you see these columns above the trend line, okay? Those are high volume scenarios. Then you have the opposite, of course, which is low volume. They both tell a story. High volume, low volume. So remember what I talked about, buying, selling, waiting. When there's a surge of volume above the norm, that's where you get bigger price moves on average, okay? Surge. That's what I define as a surge, okay? So above the 20-day average volume. So what we do is, remember, we go vertical. We're looking up and down. So at any point in time, we're looking at the relationship between where price is versus the trends. Then we're looking down to know, is this a convicted, meaning there's conviction behind it, meaning there's transactions supporting the direction. Low volume means that there's not, right? It's a lower volume day. So you expect tighter ranges. You also leverage volume to know when a trend is about to end. So when trend is about to end, you can sense that with volume as well. So understanding top vertical looks, meaning I'm looking up and down on a specific day. These reversal points that you see here, that's where you want, that's the biggest maximum opportunity for profit, is when you catch the reversal. Meaning something is down, then it goes up, okay? So what we utilize, depending upon your aggressiveness or conservativeness, right? Everyone's gonna be a little different on what their comfort level is. What we look for is, first, we look up top. Okay, so now I'm talking about actionable trading right now. This is about, number one, finding an appropriate stock to buy. Drilling down to an option is very simple. Okay, that's the most simplest part of the strategy I'm teaching you today. Okay, that's the simpler part, because our goal is to find the stock poised to break out. Then we drop down and find the option. We don't go option and then find the stock, right? Because options are a derivative of the stock. So if we can find a stock move ready to break, then we drill down and look for the appropriate option chain to buy or to trade, okay? So what we look for is, we're looking for two steps, okay? Number one, very simple, is we want to find the opportunity or the moment when we get a reversal opportunity, meaning something is down, then it goes up. Okay, that's a point of reversal. Now the tell in what we look for, the initial tell is that we're looking for when we get the initial break, okay? So this is the pattern break. When we get the crossover, okay? But what we want to ensure is that we have momentum behind us. This is momentum breakout trading. So you can see even though we had a break of the pattern, we haven't yet come in with buying volume below, okay? It's lower volume. This is what's known as a bull trap, meaning it sucks people in thinking that this is the moment, but it's not really ready yet. It hasn't really kicked off yet. So we're going to fast forward. You see, we still have low volume. Look at the price. See how it starts sliding to the right? It's sliding to the right. Volume starting to pick up, slows down. So here on the 14th of July, we get our first at volume day. Now, it wasn't a surge. It's basically right at it, okay? Right at volume. These moments where you start to see pickup of the volume is where we want to be. So if we come back here, I went forward too fast. You see, this is our first inflection point. 82 million, almost 83 million shares came on the board. You look up, you can see we got that big green bullish bar. We're now above these trend lines. You see this? We're above the 10, above the 50, above the 20, and we get our first big volume surge below. At that stage, you'll then see this market start to move. All right, so here's the move. Remember, this was the arrow. This was the moment. Back here, vertically, that gave us the first directional confirmation that the buyers are going to move this price up. Volume was low, volume picks up. Pattern-wise, in the uptrend, and look at this thing go. This is Apple. This works on any symbol once again. Once the market is running like this, meaning we're creating higher highs, right? We'll then start to see the market end its momentum, meaning the trend will end, okay? Remember the spectrum side. So we set a high here. Now, officially, a high is two bars to the right lower, 2 bars to the left lower. Okay, that's a public domain. That is a common definition of a low or a high. So a high is 2 to the right lower, okay, meaning these wicks are lower, to the left lower. That's a high. So what we do is we then look to where the volume is. So not only do we get a high mark, 2 to the left, 2 to the right, but we start to see bearish volume show up here. See the 19th? That's there to say, oh, this is more than likely going to retrace and pull back, right? So the story told is extremely valuable. You see, now we flipped on the backside. Now we're on the bottom underneath these trend lines. Another big bearish bar. Look down below, volume. So where's this going to go, up or down, right? Just think about what we're seeing now, big bear, look down below, big volume. Where's it going to go? Up or down, right? Now, we know where Apple is already, but this is how you look to the future and go, what? Look what just happened. Okay, this is set up to move further down, right? So it's not magic. It's not mystical, right? It's nothing more than aligning, like a down with a capital D, aligning trend with volume. Understanding simple highs, simple lows, you can start to really understand how this market is ticking and operating, okay? This is Apple. I mean, you can go to, I don't know, let's pick Northrop Grumman, okay, NOC. See the flip? We flipped from downtrend, right? So we're below to above. Look at this big move, right? Big volume bar. You scroll out, you look at these big reversal points, 9 out of 10 times, 8.5 out of 10 times. When you see a reversal, like the moment of reversal, you're going to see volume pushing it on these big volume plays. Come into Moderna on the way down, does the same thing, okay? Here's Moderna. See this volume spike at the breakout? See this reversal point? Look at that, 7 million, almost double the volume. That's the sign that Moderna is going down with a capital D. Everybody see that vertical look here? Break the trend, boom, high volume. Look at this extension on the way down. NIO, same thing. A lot of these are in downtrends. Same thing on the volume plays. How the volume interacts, low volume end, up, there's the extension bar, boom, surge down. Same thing on the up move. Look at the up move back here. Crossed above, look down below, surge of volume, price rally. So when I look at the big indexes, like the S&P 500, same thing happens here on the big level. Same way as if I'm looking at a big index, same way I'm looking down at a individual stock, a non-ETF. Same repeatable patterns appear. Low volume, see this low volume territory here? That means this extension to the retracement is not going up any further. The bulls are running out of momentum. Type in a yes if this is making sense. I want to make sure that you're following this vertical look at where we're at in a specific chart, in a specific trend. Type in a yes, yes, if you're starting to see it. You don't have to master this today, okay? I don't think I'm that good, okay? That's for sure. But I want you to understand the concept of tying in trend to get direction, volume to get the actual confirmation. That's the key to this, is vertical up and down look to see what type of day are we having. I could go back historically, I can go back to the future, same process. Now I'm showing you some future tense, but I can't fast forward this to show this. So I'm going back to show you what it looks like. I don't have a crystal ball. Okay, no one does. There's no 100% absolutes. We're talking about probabilities. What's most likely to happen. That is the essence of trading, is we're all trying to understand what's about to happen next. What is the highest likelihood? What is that highest likelihood next move going to be? Is it going to be up? Is it going to be down? Is it going to be a strong move up, or is it going to be a weak move up, right? Is it going to be an extension? Is it going to be a pullback? That's the story that volume tells, and trends. Those two things independently are powerful. Those two together combined is extremely powerful. All right, so let's get the webcam going. It's been a while since you've seen me. I'm here with you. It's not recorded. Okay, I'm live in action with you. So ultimately, tying this together, the next question is, how do we apply this to the open market? Well, to do this, I'm going to show you a couple of these charts here. Now, these are both calls, long, some of these are shorts. Now, I'm going to show you a couple examples of how it all ties in together to show the actual breakout. Okay, so we're going to go to some shorts. Okay, so this was a trade. This is on gold, GOLD. I'm going to get rid of some of my advanced techniques here. But let's just talk about this for a moment. I want you to see how it's applied in recent market activity. Now, in the rapid profit method, I'm going to call trades directionally based on opportunity, in the money, out of the money options. We haven't done any recently because we hadn't needed to, but things like covered calls are viable opportunity strategies that are open for us to use. Stock trades, if there's no good options, but the stock is great, we'll send out the stock details. Some of them are low price stocks, so it acts like an option as far as profit potential. So those are things that I like to trade. But I would say, once again, 80% of any signals I send are option based. So this is a trade. This is gold, okay, not the precious metal. This is in the metals and mining sector. And this signal, just so you can see what, to me, a signal should look like, or what a trade should look like. This was a bearish trading opportunity. Okay, so you can see where we're at, and this is back on the 19th of August. Okay, so we had a downtrend, right? See how we're below? We just came up off of a retracement. So I like to trade reversal points, meaning we just reverse from up to down, like back here. The second place I like to be is following a retracement. Okay, so downtrend, right? You extend, you retrace, you extend, retrace, extend, retrace. And I'm trying to do what? Catch the extension, right? Catch the extension down, the next move, right? The goal is, how do I catch the next move? We're trying to forecast, anticipate. I like to use the word catch, right? I want to catch the breakout. I don't want to chase it. I want to sit there. I want to wait. If the price is right, if it triggers off what I want it to do, then at that point, I'm into the trade. Nothing more, nothing less. Keep it simple. I don't do market orders. I don't smash the keyboard trying to time the market. Never had a high level of success doing that. Too much emotions come into play. That's my words of wisdom. Catch, don't chase. So gold, let me show you the details here so you can see it. GOLD, go into my emails. 19th of August. So let me come down to my email here. All right, this is the actual signal that went out. So when we come down to gold, GOLD, this is what it looks like. So trade, this is a put, okay? So that's a direct bearish directional trade, right? That means I want the stock to go down in price. So rather than short the market, what I prefer to do is I want to buy the put. I don't like shorting stocks. So I prefer to simply trade in the direction without the risk of shorting and just buying a put against it. That's my preferred method. So ultimately, we need to know what? We need to know the direction, right? I'm buying a call, buying a put. The next thing we need to know is what's the expiration to select, right? We got to choose the expiration month. Then we have to know what? The strike price. Okay. Then we have to understand, what the limit is we want to pay. That's the option premium limit. And then we've got to know when are we actually going to buy it. Okay. That moment of when to buy is the most crucial part. So what we use is the underlying stock. So you can see we want to buy the put at 16.01 or lower, $16.01. We have a stop loss so we can minimize risk, 16.89, and then we've got a profit target of 14.91. That's exactly what was on this chart here. Okay, that was exactly on there. So that's the setup. Now you can see this was based upon the analysis. This is Friday the 19th, right? So if we come to the 19th here, that's Friday, right? That's after the market. So I prefer to trade the market when the market's closed, meaning it's after 4 o'clock, dust is settled, let's find breakout opportunities. Because what I'm trying to do is catch the opportunity the next trading session, which is the next day. So this setup occurred based on Friday's market movement. So then on Sunday, I go into the market and I find potential breakouts. And that's where this signal came from. So based upon that, we then have everything we need of that trade to set up and catch the opportunity. That's the goal, and that's the focus here of how do we catch these opportunities. So effectively, when we're looking at the break and how this works, is we're timing the next day. These are catches for the next trading day. So you can see the low on this Friday was 16.02. You look to the right where it says entry order, the entry trigger price is 16.01. Because to really get a breakout, we need to confirm the breakout's happening. How do we confirm the breakout? Well, the price is going down in this direction, right? So this type of entry orders allows us to avoid whiplash as much as possible. We can't avoid whiplash. That's when you get in and the market goes against you, right, when you come in. But we try to avoid it as much as possible. That's the ultimate goal, right? How do we eliminate or lower that opportunity, right? So we catch it the next day. So in fact, what we do is we set up certain order types, and I'll show you what it looks like. Certain types of orders into our broker account to set up an auto trading type of feel. So this is the actual order that was sent out and set up for that trade. You see the time here, August 21st. Okay, that was Sunday. 20:34, I'm in Florida. Okay, so that's 8:34 p.m. So we're going to buy the put. You can see it here. Let me know if you can see it, okay? This is the actual confirmation ticket. So we bought 2 contracts. This is a pre-order, okay? It's not there yet because this is 8:30 on Sunday night. So here's the trade details. We're going to buy 2 contracts, 2 long puts for GOLD. There's the expiration. There's the strike price of $16. And then for an option, meaning it's your choice if you want to use a limit on the option or not. The limit here was 70 cents on the option. But it has a condition. Okay, this is conditional orders. The number one, the first order condition is gold, this symbol, has to mark at or below 16.01. 16.01, okay, that's the trigger. So this order will not fire, this will not buy, unless the price is 70 cents or lower on the premium, on the option, and gold has to mark at or below 16.01. If it goes live and triggers those conditions, then we have a profit target and a stop loss pre-built. So you set it up once. Okay, so the beauty of this is that you set it up one time, which you can see here was Sunday at 8:34. Okay, set up once. If it goes live, full protection, stop loss, profit target. You don't have to touch it. If it doesn't go live, it doesn't hit those conditions, trade cancels automatically. It's only good for the day. What this does is powerful. It's an arm's length transaction. You don't have to babysit your charts. You can set up your trades in the evening. That's where I set up my trades 99% of the time, is the night before. Set it up one time, don't have to mess with it. Once I set it up, if I go on vacation, my trade's protected, both sides. It's all done up front. So you know exactly what the risk is. You know exactly what the trade details are, all up front, 100% transparency, which is the way I like it, right? There's nothing to guess about, nothing to go back and worry about. Everything is set up in advance. All you have to learn, if you don't know how to do it, is set up the actual trade ticket itself. This is Thinkorswim, but my clients use every broker you've seen or heard of. This strategy works and is used for it. There's nothing magic about this setup. It's nothing proprietary to Thinkorswim of how to set this order up, okay? So effectively, all that has to happen now is the trade has to trigger. So we got the trade set up. Next day, enters the trade, right? So we mark 1601 or lower. As the trade moves, right, we then hit profit target on the 30th. Automatically exiting. If it stopped out, we would have stopped out automatically, right? This one, retrace, extended, hit our profit target. You can see exactly what it looks like because I track it all here. And here's the ticket. Here's the exit ticket. At 10:38 on August 30th, you can see this order was filled. So the ticket, right, it was an OCO, one cancels the other. We had a sell at 14.91, right? That's the profit target. So we exited the trade at $1.21. That was the final price. So stock hits trigger, 14.91. Market order on the option fires automatically. I was in front of my computer. You could see it was a 10:38 entry. So that turns out to be a 65% profit from entry to exit in, I don't know, was it 12 days, 9 days? So from the 21st, exiting on the 30th. Okay, well, the 23rd, so Monday. So triggered by the 30th, right? That is what breakouts look like, right? It's identifying pattern breakout opportunities, setting up entry orders, and then from there, knowing what option to select. Selecting the option chain is one of the most more simple processes that you'll see deployed, is selecting the option. If you're not familiar with options, don't worry. I've got options training available so you understand the concepts, what we do, how we do it, how to set the trades up. That's easy. Okay, that's the more simplest part. Let's go to a different one. Here's another one. This is Pepsi. Okay, same thing. So here's Pepsi. This is Pepsi, the Pepsi that we talk about, right? Huge brand, of course. Same thing. This was at a buying at a high and trading counter trend, meaning we're in an uptrend, but we know the gravity and how it works, the gravity of coming back down to the 50, and you can see the same look and feel here. It's all momentum. This is the top side momentum. This is high side reverse momentum. Big volume bar, hit the number, okay? After a high, we got an entry, we got a profit target, got a stop loss. Full trade details, of course, were sent out. This was an active signal that we used. And watch the market react. Shouldn't take long, right? Sometimes we get stuck in longer trades because the market volume shifted. But you can see all the way down to the profit target. So another put, right? Meaning we bought the put. So same volume, that's the key, is volume direction. Now, this was an advanced setup because we traded this towards the 50-day counter trend, but same concept of volume and how it plays out. Now, the reason I'm showing you this is because I want to give you real examples of what actually happened, especially on the option. It's hard to go back and show you what happens on an option trade without having all the details tracked and stacked, so it's easy to use. So the same thing on, Pepsi, just to show you what it looks like. This was an 82% profit, but you can see all the same order types. This is this is really powerful. If you haven't done it this way, I get it. It's not a often used tactic, but what I found is that it really helps the emotional side of trading, helps manage it, giving you freedom to trade without being in front of computers all day, right? Running analysis, running a simple formula over and over again that combines trend, momentum, allows us to be able to do this types of hands-off trading. Though we're obviously looking at opportunities, we find them, we set the trade up, but we set up once. And the power of that is we're not subjectively, emotionally making these decisions. And to me, that's what I find is most important, is trying to remove a lot of that from the equation, right? Try to remove a lot of that feel good or feel bad, greed, fear and greed type of trading. I got questions coming on GERN. Is GERN, so GERN is expiring. It's one of our signals. Are we going to hold on to it? Yeah, Friday's the drop dead date. So by Friday, we'll either close or let it go. But Friday's the day for that decision. 7 days prior to expiration. That's the drop dead date. 1 week prior to expiration. So that's next Friday. Yep. Well, we'll go through that on Thursday. We'll go through that on the symbol is GERN is what he's referring to. So talking about what it looks like, right? So let me just show you an example of details of a trade. So here is the email that went out for Pepsi, okay? How many of you can follow these instructions? So if I told you the symbol to trade, told you what direction to trade or how to trade it, this is buying a put, gave you the expiration, gave you the strike price, gave you the limit of the premium, gave you the stock trigger price to enter the trade, right? What to wait for, what to look for, gave you the stop loss, gave you the profit target. Type in ME if you could follow those instructions. Is there anything missing from this equation? Is a better question. Type in yes, type in me, type in yeah, that's easy. Give me some indication, because you can see I'm not looking at 55 data points. We're looking at the stock. We're looking at an entry. We have a profit target. We've got a stop loss. Now I've got a full catalog lessons of how to pick profit targets. Okay, I've got lots of content, lots of education around how to pick profit targets, a ton on how to set a stop loss. That's more simple. I want you to understand what it takes, right? So if you can trade this in these conditions, right, to be able to pull profits like this in a short amount of time, you don't have to be highly active. You don't have to trade every 5 minutes, right? This is all end of day stuff. For my clients, once they get up and running, there's really two thoughts. Now you can tell I like to teach, and we're going to talk about different strategies, different ways to stack profits here in a second when we talk about stock trades in just a few minutes. But what I provide is a signal service. Our newest launch is the rapid profit method, which is what you're seeing here today. But I also teach twice a week live. So it's based upon how you want to take it. You can say, look, Matt, I don't want to learn. I don't have time to learn it right now. I like the concept, but I do want your signals. Okay, that's a way to go. And then I have a collective group of you all that say, man, I really want to learn this and I want to take the trade. So you want to do both, right? That's fine too. And then I have some that say, look, I don't want your signals, Matt. I like them. That's nice. But I really want to learn your method. Okay, that's also nice. So ultimately, what you do with this program and how you use it is up to you. What I've taught you so far today is trend and momentum. Now we're going to go further in detail in a few minutes here. So don't worry about that. We're going to go into a lot more detail of entries, of how to find these, right? So that's one thing. I think finding these opportunities, right? I don't review 7,000 stocks manually. I don't pull up the entire list of common stocks and flash through them all. I could probably do it. I don't know, let's see, 7,000. Probably take me about 30, 45 minutes to do that. But I don't do that. Okay, so I'm going to give you actual screeners and filter settings to find breakout opportunities. Okay, that's what I'm going to do in the latter end of this event, right? I'm going to give you all those so you can see it. I'm going to give you my main strategies there. But ultimately, this journey is not a one-day trip. The market conditions today are not going to be the market conditions 3 months from now. In fact, as of late, the market conditions today won't be the same conditions a week from now. So part of the value of this two-edged sword method is learn the method that I'm sharing with you, and then stay on top of the market as a collective group, because that's really ultimately what I do twice a week live. Is we set the game plan for the week. We have 2 sessions a week, about 2 hours each session, Monday nights, Thursday afternoons. Exception was today because of Labor Day. We had one this morning, but ultimately we're on top of the market. We know directionally what to expect. We know what's on the horizon, what type of fundamental announcements or news announcements can impact the market. Do we expect low volume? Do we expect high volume conditions coming up? Those are things we stay on top of every single week. And so it's really a transformational effect to understand how to simply look at trend and volume, aka momentum, together vertically. I think a lot of you that have been in the markets are really wondering, man, is it really this simple? Well, like I started off the event with, I'm not here to make it easy. It's, I'm here to make it simple for you. Understanding the relationship between where we're at in the chart and what's happening down below with volume is 2 of the most powerful tactics you can deploy in the market. Now, depending upon your experience level, some of you have more experience, some of you have less experience. What's amazing about this concept is usually in about 2 to 3 weeks, you're able to see what I see. And that's what makes this easy to teach to, easy to coach to, because we see the market through the same lens. There's very little subjectivity behind what we see in the market. That's the power, at least on my side, to help pass on this skill to you, is because it is a objective, up and down, yes or no question, right? Is the bar above the 50-day? Yes or no? Do we have volume above the average? It's a yes or no question. It's not maybe, it's not kind of, it's either yes or it's no. And that's really the power of this, is combining the objectiveness, which is math driven, with an ability to go find them. Okay, that's what I'm going to share with you next, is how to go find these opportunities. Now, I do have questions on this. Let's do this for a second, okay? I have questions about what's the rapid profit method, how much is it, what do I get with it? So let me just spend a few minutes going through that. I will say that we have a special opportunity for you. You're going to really be blown away, because I was blown away when my team put it together. But let me explain what this actually is, versus just hearing me talk about it in the background. All right, so let me take 5 minutes here, and then we'll get back to breaking down the real power is finding these opportunities as they come up, the search criteria. So the essence of this program is simple, okay? It's all about putting you in a position to find opportunities. Now, number one, I'll be hand-picking and sending out signals to help the journey, okay? So I send them out Sundays, Tuesdays, Thursdays. At times, there's no signal, okay? Like leading up until non-farm payroll, there wasn't a signal because of the expected volatility, right? So we wanted to wait and see how the market reacted. And then there's times where the market presents itself an opportunity. I'll send it out outside of those details, but we send out emails, text messages, and then we have that tracking site that I showed you earlier. Okay, that's the main schedule. So the rapid profit method is email alerts, as mentioned, Sunday, Tuesday, Thursday. SMS, full details on the text message. You can literally just get the text message and trade off of it without ever having to log in anywhere. Okay. I'll show you an example of what the trade details look like. So full details sent right to your phone. This is right off my cell phone. So that is we had a short signal go out on KB Homes. You see buy the long put, October 21st strike, $29. There's the limit, everything listed there, okay? That is right off the phone, full details. Nothing to guess, nothing to assume. Then you get the cloud trade tracker. Okay, so that has every signal sent out. It has all the details. It has the ticket. Okay, so you can actually see the confirmational ticket. So that way you can check your work and make sure that your trade looks just like the trade ticket that I put up there, right? So I just find the more information you have, the better off you're going to be, right? So everything's laid out in front of you, nothing to worry about, nothing, no details left unturned, right? You can see it all laid out. Now, I love to teach once again, okay? So the rapid profit method is exactly what I share with you. It's all about generating trades for you. But along the way here, I found that people really excel, right? So following me along is great. It's fantastic. Just wait to send me signals. But the real power is combining live support, live training, live analysis on top of this signal program. So as a bonus, because of this finding, I'm going to give you access to me in the Market Pro Live session. These are Market Pro Live Club sessions. That's our twice a week live events. I had one this morning because of Labor Day, but typically it's Monday night at 7, and then it's Thursday at noon. Okay, but holiday week, we tend to shift it just for the holidays. So I'm going to give you a full year of that twice a week live analysis and support. At times we do trade calls, like this morning we set up a trade signal this morning. I'm also know that it takes a level of knowledge to set trades up the way I set them up. Some of you have limited options training. So I'm going to provide to you what I call the empowerment toolbox. So this is basically the last 15 years of the top lessons that I put together. I want to give you access to that toolbox. Okay, so it's got videos, it's got written, education, it's got checklists, it has calculators. It's everything that I found to be important to help you succeed. I got watch lists in there too. So I want to make sure that you have every tool to be able to take advantage of not only just signals, but also the learning aspect of how we generate these trades. Once again, for those that have limited options, we're going to give you access to our Options Mastery Academy. So this is a huge workbook full of options education from simple all the way to advanced techniques. Okay, we're going to give you that. And then, of course, some of the most important pieces to the puzzle is how you manage your money. And so, of course, I want to make sure that you've got all the tools and lessons around money management, how to guarantee a profit, how to scale in, how to scale out, right? When to take profit, when to not take profit, when to buy back in, right? When to get out and look for another opportunity, right? That's all about money management. So in essence, if you wrap all this up into a shiny little bundle, right? You add up these, we've sold these programs independently, so we know exactly what the value is. With the program plus the bonuses I want to give you, you're upwards in the $8,600 range. But what we're going to do for the next 24, we'll call it 36 hours, okay, is give you an opportunity to sign up for just $299 for the entire year. So that's $299 for the whole year. You're going to get signals sent out to you Sundays, Tuesdays, Thursdays, stock signals, option signals, everything laid out as I've shown up to this point, plus all the bonuses for that entire year for $299. Now, this is where it gets even more crazy. To sign up, all you have to do is go to rapidprofitsmethod.com. That's all you have to do. Now, the first 10 people that go right now and sign up, you're going to save $100 off that price. So what you have to do is you have to go to Rapid Profit Methods, and you better do it now because it's literally set up automatically. Go to Rapid, I'll type it in so you can have it, Rapid Profits Method, so it's a plural profits, method.com. On that page, there's a coupon code. If you type in MATT, capital M, MAT100, it'll knock this down to $199 for the entire year. Now you may be saying, Matt, that's a crazy price. The only reason we're able to do that is because we have a large number of subscribed clients. So we're not talking about 1, 2, 3, 4, 10 people, 20 people, right? So we don't have to charge a large number, a large dollar figure to provide this service to you. Because we deal with hundreds of traders, we're able to lower that price, lower the threshold to come in, and pass the savings on to you. So it's literally $199 a year only for the first 10. That literally will go away. It'll tell you we've hit capacity. So go right now, go to rapidprofitmethods.com. It's plural. You can see it on the screen. Go to the coupon code and type in MAT100. I'll show you what it looks like so you know you're in the right spot. So it'll redirect you over to this page. So this is the page. You want to click here to enroll, add it to cart. You'll see the bonuses. Down here it says coupon code. You want to type in MATT100. So if you apply that code, right, just hit apply coupon code, it'll take off. I don't want to do it because I want to hold up a spot. So if I do it, it'll actually reserve it for me, and I don't want to do that. I don't want to take that away. So next 10 only. Now, you're also going to see 2 special offers from me. I also run what's called the options profit generator. So the rapid profit method is 3 times a week. Very specific types of trading. So the options profit generator is really our flagship. This is a daily option signal program. You typically would sign up for $400 for the year, but if you sign up and add this, you can pay just simply $39 a month. So you can go month to month on this. We don't sell it that way, but as a special offering, if you want to add that in, you can do so. You can cancel at any time. This down here is also another special bonus add-on. This is our special reports pack. So this is really extremely insightful. If you like to read, if you really like to understand how the markets work from an in-depth perspective, what you're going to find in this special report package is tremendous. Anything around the Titans data, those are your top hedge fund traders. So what we've done through these reports is we've brought in and collaborated the information from some of the top hedge fund traders in the industry and built these workbooks, built these reports to pass on their knowledge. So it's been a ton of work for our team here, but these are fantastic assets and resources to really help improve your trading success, really teach you. I mean, they're really giving you the open formulas that they use to evaluate the companies that they buy. That's the other special offer there. So, that's definitely up to you, but I definitely recommend you at least give it a try. Now, there is a 30-day 100% guarantee on this. Black and white, there's no criteria, there's no steps to complete, there's no criteria to qualify for your money back. It's strictly time-based. Now, from my perspective, what I would appreciate is what I like to call a gentleman's agreement, where we take the guarantee a step further. Okay, now, like I said, there is no black and white, there's no fine print. It is exactly what you see here. So I want you to save because I know you're going to love it. So make sure you take advantage of the MAT100. I'll get an update here in a second to see if there's any left. But if any reason you're not satisfied, it could be you don't like the sound of my voice, you don't like my strategy, whatever your criteria is. I would hope between you and I that if you sign up, it's because you're committed to your success, meaning you know that to get success, you have to spend some time. You have to devote time to get a return on time. So if you sign up, I'd appreciate if you at least show up to 4 Market Pro Life sessions with me. It's not part of the criteria, but between you and I, a psychological agreement, I say, if you're going to sign up, come see me 4 times. See me live. Can't watch it live. Don't worry, they're archived. Watch the Market Pro Live session and place a trade. If at that point you're not satisfied, that's fine. But what I don't want you to do is just buy it for the sake of buying it and ultimately never do anything with this. Because what you're doing is you're taking up someone else's spot. So remember, it's black and white. You've got 30 days. But between you and I, only sign up if you're really committed. All right? I mean, just give this an opportunity more so than just a few minutes. So just know that you're not, stuck for life. If you want to keep the price, because I guarantee the price is going up. If you want to keep that price, just stay active with us. Okay? Don't let your subscription lapse. Make sure you bill every year and you'll lock in that price. If life happens, which it does, and you need help, you need time, let us know. We'll put your subscription on pause, okay? Then we'll fire it back up. Another reason that we're able to keep this price low is we don't have an army of salespeople. You're not going to receive phone calls from us and all that normal sales practice because we like to keep things nimble. We let the teaching that I go through in these events really display what you have in store, right? Without having a huge army of people. So we're nimble. We're able to provide support using the online methods that you've seen so far. And that's been a huge part of allowing us to keep the price lower, right? Just with the few trades I showed you would have easily paid for your annual subscription already, right? It only takes one trade to cover, right? So that's the goal, right? To get you out of that mindset of trying to worry about a $2,000, $3,000 product, and then you've got to make that money, plus you got to make profits. So we keep it down. Another reason that we're able to keep the price down is because of you spreading the word about us. So if you have someone that you know, a friend, family member, coworker, a stranger, and you're satisfied with me, let them know about us. So those are some of the main reasons we're able to keep the price low, is because of referrals. We don't really drop a lot of people, so people stay with it. So that helps, and we're nimble as a company. So we've got a very focused group of support, and that allows us to handle all of our clients without a huge price tag for you. Okay, so take advantage of it. We're here for you. Yep, it'll renew at $199. Whatever you sign up for, you're going to get renewed at. Yep. So if you got the first 100, congratulations. You lock that price in as long as you're active with it, right? What I mean by active, meaning you don't let it lapse. Yeah, you don't want to let it lapse. Okay, but other than that, you'll be good to go. But that is what it is. Now let me just go through the bonuses real fast so you understand. So remember, this is what it looks like. Okay, so those are the instructions, full details, full mapped out instructions. So you can't, mess up. What I recommend you do is at least the first couple trades, set it up in your practice account first, get familiar with how it works, and then that way you can have full confidence in the entry methods. Okay. All the details are mapped out. This is the options training. Okay, so part of your setup is understanding how to select the option chain, how to read the option chain, what all the little things mean on there, all the Greeks. Okay, so you're going to get that as a special bonus. How to set up order types. This is autopilot. This is where we set up those OCO orders. I showed you the options, same thing on stocks, just different order types, but same method on just buying and selling stocks outright. Same process. You're going to learn how to set up autopilot. You're going to get access to all my traders checklists, all step-by-step process, all the filters, all the screeners. I'm going to show you how to screen and find opportunities here in a second. Master money management, of course, important lesson. You're going to have that bonus. You're also going to have access to my momentum breakout trading course. So what I've shared with you today is really lesson 2 and lesson 3 of the momentum breakout trading program. So you're actually going to have access to these top lessons inside of your empowerment toolbox. So how to set entries, how to set profit targets, how to set stop losses, how to use the checklist that I just gave you, how to select the best option chain. All of those are going to be given to you. It's about 10 and a half, 11 hours worth of education here, all pre-recorded, ready to watch at your disposal. That's really going to teach you how the setup actually works, the entire north to south setup. Now, this is that bonus. It's the Market Pro Live session that I was talking about. This is Mondays at 7, Thursdays at noon. We've got hundreds and hundreds of hours of archive content. Now, the value of the archive content is you can go to a specific point of time and go see how we called it, how we analyze the market. So go back. I mean, you can literally go back 2 years, I think 2.5 years, and see all of the pre-recorded sessions, archive sessions. But those are live. That's the live training sessions twice a week. So the first 10 at this point is gone. I believe it's gone right now. So yeah, just got word that the first 10 is gone. Now, if you aren't quite ready, don't worry. I want you to write this down. First 10 is gone. I just got an update here from my support team. You could save $50. Okay, so this is a 2-tier fire sale. So you had the first 10, congratulations, you got $199. But that's okay if you missed out on that first 10. The next 10, write it down, MATT 50, MAT 50. That'll save you $50. So that's just another bonus for the next 10, but I think you all would agree in this industry, to get what I'm going to give you with this sign up today, $299 is extremely, extremely valuable for the price, right? $299. I've been in this industry a very long time. I create programs like this that have sold for $2,400, $3,000. hands over fist. But once again, my goal is to empower as many people as possible. So what I found to do that is build a program, build a system of support like you're seeing here, and allowing us to draw down that price. That's the goal. But this price won't be here forever, of course. But that is definitely the opportunity for you. I just wanted to go through a little bit more detail before we jump into the next portion. Of those that got to run rapid profits, plural, method.com. At this point, the MAT 100s are taken, so you still have the 50. And hey, if that's not enough for you, don't worry. You can sign up at the full price. You're going to get the same service no matter which way you sign up, okay? And as long as you stay active, you're going to stay with it. All right, perfect. So it looks like we're good to go there. All right, now at this point, how do we find these? Okay, let me know if you've signed up. Type in RPM. RPM. I'm curious to see how many of you took advantage of it. Just type in RPM for me. I want to make sure my team knows to follow up, just to double check everything for you. RPM. And then we'll jump into the next step. All right, perfect. Wow. Oh yeah, so we well beyond that 10. Okay, perfect. All right, fantastic. All right, so the next method here. Oh, I got a question on results. Okay, so the rapid profit method. This is what we've done up to this point so far. So we've got 2 closed positions at this point. This program we launched here on the 15th, okay, a couple weeks ago. Now I've been sending out signals for different programs for years, okay, but this rapid profit method for options, we just launched here a couple weeks ago. 2 closed trades, gold and U, total 161%. We have 3 active positions right now. These are open. They're not closed yet. Total of 69%. So what a percentage? Well, if you started off with this when we had our first enrollment a couple weeks ago, right? You put $1,000 into a trade, for example, 161% is $1,600 in profit. So it was $299 worth the investment. Of course it is, right? If you miss those and you're in active positions, close out right now, $1,000, you're up $700. You doubled your initial investment. Okay, so once again, it doesn't take much to recoup your cost. That's the power of this. That's why we have it low. Everyone always wants to talk, oh, what are the results? Okay, that's fine. We've got all of these up top here are different signal service programs that I run. Okay, this is a specific method of selection for this program. Nothing overlaps. Okay, so always unique and full details given. I just want to highlight that because I had a question about results. All right, so finding them is as straightforward as you can imagine. What we need is we need an engine. We need an engine to find these for us. Now, one of the huge benefits, one of the massive benefits here to this strategy is that we're using indicators, mathematical generated indicators on the chart. So what we can do is actually use filters to find these opportunities. Let's see, I've got you, no worries. One of our clients needs help. His computer had issues. Needs to be resent. Okay, I flagged you there. We'll make sure our team gets your updated information. All right, perfect. So we got to find them. Okay, so many of you ask yourselves and go, well, how did you know that gold here, for example, was set up in a position to break out, right? I mean, how do you find it, right? I'm not going to go through thousands and thousands of stock symbols. That would be crazy at one time. So that's always the magic question. How do I find this type of opportunity, right? That breaks out and runs. Well, what we do is we leverage the screener down below. So based upon specific criteria that I give to our traders, right? We build these screens that allow us to leverage technology to search the market, okay? Now, we run 4 main checklists. Up bullish breakouts, bearish breakouts. That's up and down. There's 2 types of directional checklists. There's conservative, there's aggressive, okay? conservative bullish, aggressive bullish, conservative bearish, aggressive bearish. Okay, both sides. Everyone's different. Everyone's got different comfort levels. Each one of these gives you a different look and feel to the chart. Conservative is where we have all three trend lines below the price. So we have three trend support levels underneath us. That's what conservative is. Aggressive is we have one. It's trying to, aggressive is we're trying to find the first time we cross and reverse, both up and down. Okay, that's what it looks like. So I'm going to pull up on the screen here the aggressive bullish checklist. So that's what we're seeing here. That's what this is. This is the aggressive, you see it here, bullish checklist, right? Here in the middle is the precise settings to set up the screener. What I'm going to do is I'm going to pull this up, and I want you to take a screenshot because like I said, I want to give you some of my tools today. That was just one of four. But I want you to take a screenshot now. There's a camera. So if you get out of full screen mode, so if you're in full screen mode, you want to exit that. And what happens is you'll see a camera. That camera, if you click it, will take a screenshot of whatever I have on my screen. So right now you have an ability to take the screenshot. This is my aggressive bullish checklist. This is the screener settings. So they're filters. Now, what this does is it answers some very important questions for us, and it sets the groundwork for a specific type of trade. Okay, that's what we're doing. I want to use this technology to find trades, and I'll look at them, and then I'll find an option. So volume, this provides liquidity. Let me write this up so you understand the precise reasoning behind every single tool here. Let me get a color that stands out. Let's get blue, okay? So this volume and this volume provide liquidity. I want to trade stocks that have volume, that have liquidity. Okay, it means I want to buy something at a price. I want to make sure that I can buy it at that price. Come time to sell it, I want to make sure someone's on the other side. So we need to make sure we have liquidity factors. Okay, that's what these two are. I want to have a stock that averages over 60 days, 1 million or more average. And then I want to see volume today above 1 million. Okay, so that's my liquidity factor. Now, the change price is pattern. So this means I want to see a bullish day or bullish bar. So that's pattern, change above 0. I want to have price crossing up on the simple moving average 50, meaning I'm seeing a reversal point. I want to see the price crossing up the moving average, the 50. Okay, so that is also pattern. Now, the momentum is found using relative volume. So this screener gives me liquidity minimums, filters by liquidity, filters by pattern, and filters by momentum. That's what relative volume does. Relative volume is a factor. So when I have above or equal to 1, that means any stock would have to be above their average volume for the day. That's what that represents. If I had a 2 in, that'd be double. If I had a 3, that'd be triple. If I had a 4, that'd be quadruple, right? So 1 means at or above their average volume. That's what that represents. So by using these specific filters, I'm able to find specific patterns. Now, a question comes up, can you use Thinkorswim? Yeah, you can use Thinkorswim. I have clients that use Thinkorswim. You don't need TradingView. These are all common. You can set them up very simply inside of your Thinkorswim platform. And if you don't have it, I've got clients that use it. They'll send us screenshots and we can copy them. Right? Very simple. So now I'm leveraging the power of technology to find these opportunities for me. All right. So based on right now, we've got 6 matches for the day so far. Okay, this will change as the day goes on. But right now, you can see pattern-wise, this is Rivian Automotive. So we're crossing up on the 50, and we have volume. Now, I'm going to teach you, we don't like to buy high wicks, okay, but we'll teach you that. But that wick's a little high on top. But pattern is what I want you to pay attention to. Look at the pattern here. Look at this. This is how we find automatically. I wouldn't know ISEE, right? So I had the settings done, and then boom, there is the signal. Right? See the pattern, surge above, got big volume. That's massive volume, right? But that's what this finds. ADT we talked about earlier this morning. So this is an entry that we set up in the 8 o'clock class today. Not triggered yet. We're looking to buy the retracement effectively. So I've got a buy price down here. Okay, this is what we went over in class. This type of stuff that we go over and teach to. So we want to buy this on the retracement. We're looking for the pullback, and then we want to buy it. Okay, but that's a working order. So that trade is actually working right now. It's in our tracking account right here. See this buy ADT, 778 limit. It's got our stop loss and our profit target waiting. It's waiting for this trade to get triggered. So no wonder it's on the board, because we saw it this morning and we're trading towards it. Okay, so that's an active trade right now. That's what we found in class this morning, right? But the patterns I want you to pay attention to. We're able to find these automatically. At the end of the day, there's a lot more depending upon the market conditions, but this is how we leverage this technology to do the heavy lifting. So if I remove this, to give you an example here, this is how many common stocks there are. Now, I'm not going to go to all. Let's just go to common stocks. So there's 11,771 common stocks in the market. That's the question everyone asks, is how do I find the 1 or 2 that are ready to go? Sometimes there's more. Sometimes there's 5, 6, 7 setups, right? Sometimes 10, depends on what's going on in the market. But that's how many we have to search through. That's a lot, right? So deploying these filters allows us to really drill down. And this filter, we're down to 28 of them. So we had 11,000, now we're down to 28. And remember what I said, we all see the same patterns. I'll see what you see, you'll see what I see. Because as long as our filters are the same, this is another advanced filter, but as long as our filters are the same, then you're going to get the same results that I get down here. Now, everyone's got different account sizes. Everyone has different equity management rules that they follow. Some of these may be too high for you. Some may be too low for you, right? Everyone's going to have their ability to find a trade specific for them. But the pattern, as I look at this, these are all uptrends, right? These are all uptrend stocks. Some of these are at different stages, right? But these are all uptrend stocks. We're above the 50-day. Some of these above all the trend lines, right? So now I've got a specialized list every day that I can pull up and see what opportunities exist. So that way I'm not looking at all of these individual stocks all day long. I'm able just to pull a short list and focus there on the next opportunity. That's leveraging technology. That's why you can't do this screening if you're manually drawing trend lines. It would not be as effective, right? But this is how we find potential break. I mean, that's all-time high. Front line. Wow, let's see. Does this have options on it? It does. Okay. High spread though, so that's not in our checkbox. All right, so do not get focused solely upon just a handful of stocks. Remember, not every stock is at a breakout stage. So by widening that search, we're able to diversify our signals to areas that are poised to go. I like to describe myself as stock symbol agnostic, meaning it doesn't matter what stock it is. I mean, there's a short list of stuff I don't trade or invest in, mainly CCP owned stuff. They've probably just heard me to go to webinar, but regardless, I don't trade stuff like that. I mean, I do have some limits, but other than that, I don't get too concerned. This could be anything. This could be A, B, C, could be D, E, F. As long as I've got volume, I've got liquidity, I've got a pattern, and I've got options liquidity, I'm going to trade it. And so that allows us to be nimble, as I started off the event today with. We're able to shift to areas of opportunity without being sucked into just a handful of stocks, right? We really widen that breadth of opportunity. Remember, we started with 11,000, we're down to 28. We could switch directions. We can go bearish and look for bearish opportunities. This is conservative bearish, We only got 2 set up today so far, but we still got half a day, a couple hours ago before the end of the day. But able to shift, this is what's amazingly simple to teach to, is that anybody has a question about a stock, I know exactly where they came from. I'm able to find now bearish opportunities poised to go. Look at Tupperware selling off. 30%, holy cow, right? That's the filter process. So I'm gonna pull that back up. I want you to see these filters. This is probably my most used filter here, is this aggressive bullish checklist. Yeah, I got a question on futures. So the screen is going to be a little different on futures, but the chart patterns are the same on futures trading. If it's E-minis, if it's minis, mini futures, E-mini futures, or it's classic futures trading, the filters are the same. I mean, the method of trend, the method of volume is all the same. So make sure if you take a screenshot, this is my aggressive bullish checklist. Like I said, it's my most often used trader's checklist. Majority of signals come there. That's just my personality. But on futures, here's some commodity futures that I follow. Here's corn. You tell me, can you use it on futures? Of course. That's what's unique about my strategy, is that it is market agnostic. Doesn't matter what market. If you can chart it, if it has ability to track volume, then you can use this method. There's wheat, there's natural gas pulling back, soybean on the top side of the 50-day moving average. You got gold futures, silver. You got E-mini futures. There's the S&P. Crude oil futures. Works on Forex too. There's Forex. You see, I don't have to switch methods. The only difference is the pricing, right? Using currency pairs versus buying a stock outright. I use this on crypto trading when I'm into crypto trading, which is, seasonal based on Bitcoin. So I don't trade it all year round. It's just depending upon what Bitcoin's doing. But same process I use in crypto trading. Crypto trading has volume, has charts, right? Same thing up and down the board. That's the beauty of this strategy, is that it doesn't matter what market. If there's volume, if there's pricing to it, it's going to react the same manner, right? The same type of way. Look at the euro bouncing off this 50-day moving average, extending down. We're below parity on the euro dollar. We talked about this morning. Look at these bounces off these. Those are sell points, right? Those are sell points off the backside of the 50-day. Let's do Bitcoin at Coinbase. Bottom support, I'd expect Bitcoin to bounce off these levels here. I use my purple lines for support resistance. No, Thinkorswim does not do crypto, but Coinbase does. There's, the crypto world today is a lot easier to get into than it was 10 years ago. 10 years ago was very difficult to open an account. Not so much these days. But yeah, same process. You see the crossover here? This is the reversal point here on April. Look down below. That's the time to sell it. See that big red bar below on volume? Same thing. Kick-started that move down. I have a Coinbase account, is what I use for crypto. Coinbase. But I only actively trade it with Bitcoins on an uptrend. Other than that, I don't really mess around with it. But that is, it doesn't matter what charts once again. So at this stage, to wrap this whole thing out, is there questions on setups? Let me show you the options side here for a second. This is how we select the options down here. Those are the 4 steps to options. So once we find the entry, once we find the profit target, once we have a stop loss, We then drill down upon the option. And these are the 4-step criteria we use to select the option. This is this aggressive bullish checklist. So these are calls. So we want a delta between 65 to 75. We want open interest greater than 100. And we want our expiration. We want a 45-day to 90-day buffer. So out into the future, the expiration, closest to that criteria. And then we want to make sure we have a tight spread of 10% or less, the difference between the bid and the ask. So if we find the stock to break out, then we just deploy the option. And at times you'll find a good stock breakout, but it won't have the necessary liquidity on the option chain, so we don't trade it. We won't trade the option. You can just buy the stock. You know, sometimes it's just better to trade the stock than buy the option. But I'll teach you that. But that is the criteria. So this 1-page sheet here is what we do over and over and over again. Rinse and repeat. What direction we do is based upon the directional bias that we see across the market. That's the simplest way to do it. Now, understanding the 10,000-foot view is where we come down into our sector ETFs, which we go into. So I'm not going to go over it now. We're running out of time. But ultimately, this sector board here is all of the market sectors. And we use this list as a master target list to find opportunities. So when we see, for example, finance go bearish, then we know we can look for shorts in the finance sector. When we see uranium down here go bullish, this is a uranium ETF, then we know we can find some uranium-based stocks to buy. The real value of this, to really see the power of that method, is if we look at energy. This is the energy sector on the left on this screen here, XLE, one of the largest sectors or ETFs for energy, and compare that to the S&P 500 on the right. See, what we did is the beginning of the year when the S&P, which is right here where my cursor is, this is the high beginning of the year. It was actually the low of the year for energy. So S&P 500, NASDAQ all sold off. What we did is we bought energy stocks. So 6-month bullish run here, we are trading energy. That's what the 10,000 foot can find us. So if this is of interest to you, once again, give me an opportunity to earn your business the old-fashioned way, which is by proving it to you. I don't expect you to take my word for it. I don't expect you to listen to the hundreds and hundreds of clients that love this model, that appreciate the level of training and teaching that I bring every session. Only you will know if this is for you or not. It's $299 for the year. Sure, we got some fun flash savings for you, but it's $299 a year worth an opportunity to change your profit trajectory, to really empower you to forecast the next move, right? Is lowering your anxiety, putting you in a position of full transparency, full knowledge depth to understand what's happening and what does that mean in the near term, right? Meaning if you pull up a chart at any time, you're going to know exactly what's happening. You're going to know, are we at support? Are we at resistance? Are we in an active breakout? Are we in a retracement? You're going to understand what volume is going on, what volume is telling us. So then we always know what to expect next. That's what trading is about. Is what do we have at our disposal to give us the insight to know what's next? What movement is next? Are we going to anticipate a pullback? Okay, well, if we're going to expect a pullback, then maybe it's time to take profits off. Okay, once that pullback's over, okay, we got our retracement. Now it's time to jump back in again. Both directions, up or down. I believe it is worth it. You need to be the judge of it. If you're still here with me now, then sign up. You've got a 30-day guarantee on it. So you've got a catch-all for you. You've got a golden parachute, okay, if it doesn't work. I know it's going to work. As long as you show up, give me at least 4 sessions in the next 30 days, plenty of time to do so. You can watch the archive. You can rewind it. You can fast forward it to really see if this is going to benefit you or not. I think it will. I've got a strong belief that it will. If you're still with me now, then take advantage of this opportunity. If there's any questions about the program itself or strategy, let me know. I'll stick around for a few more minutes. but rapidprofitsmethod.com. If you like trading options, then I would add on the options profit generator $39 a month offer as well. You can cancel that too at any time. That is normally reserved and sold for nearly $500 at times, $600. So you can subscribe to it on a month-to-month basis. I highly recommend you add it on. If you're like me and you like data, you like reading materials, or physical stuff to learn from, then I also encourage you to add on the reports. Those reports on the Titans Club is tremendous. Titan Investor Data is awesome reports, huge reports. I mean, hundreds of pages per report. Clearly illustrated, clearly written guidelines, rules, checklists, all laid out in those reports. So I definitely recommend you check those out and add them onto your cart. But for $249, remember the next 10, I don't know if that's even available anymore. But that's the question you're gonna answer. Let me have an opportunity to prove it to you. Like I said, I've taught you a lot, but there's still another 50, 60% of tying it together that I just don't have time to show you today. Once again, what we see today, what we won't see next week. We won't see the following week. That's why staying on top of this market together with my Market Pro Life sessions as a special bonus is where we put everything together for you. You can see it work over and over and over again, so it becomes natural. I only send out my 1 or 2 top picks. You know, sometimes I have 5 or 6 that are on the board. You'll be able to see those because what you see, I see. What I see, you see, right? So that's the real power of this process. So I'm definitely looking forward. We have a lot of people that signed up today. Question is, how many alerts per day? So Sundays, Tuesdays, Thursdays are when we send them out. Just in the last 2 weeks alone, we've sent out, let's see, 1, 2, 3. So these are the signals we've sent out just on the option side. So that's 1, 2, 3, 4, 5, and then we have 8. So about 13 signals have gone out. Missed trades means that the trade did not trigger on the criteria. So that's what missed trade is. So remember, we're trying to catch breakouts. So these breakouts if they don't happen, then the trade gets canceled, right? We want to only catch a specific pattern break. So you got 4 categories. You got new trades, you got open trades, you got closed trades, you got missed trades. Those are options. The stocks, we got just as many on the stock side, right? So we got 1, 2, 3. So there's another 7 on stocks. So we'll send out stock opportunities. We'll also send out options opportunities. So just in the last 2 weeks, we've sent out 20 signals. So you can do the math. Yeah. Stock side. So stock sides have multiple profit targets. We use a 50-50 model. So you take half off at target 1. Stop loss goes to break even. So we guarantee a profit. And then you have your second target to exit the other half. So that's the average so far is 20 in 2 weeks. So about 1 a day on average. Some days we send out 3 or 4, right? I mean, it just depends on what's happening in the market. If it's a breakout movement, lots of volume, you're going to get more signals. Low volume, you're going to get less signals because we're following momentum. All right, so there's actually, I just got word there's only a few left of those 50s. So make sure you do it now. Like I said, you've got 30 days to go through it all. Plenty of time to find out if it's for you. If it's not, once again, we'll part as friends. Just like any service, any interaction in our daily lives, we're going to be respectful, and we appreciate the same respect on your end, right? We don't want someone yelling. I don't want someone yelling at my customer support rep using foul language, right? Just as fast as you'll fire us, we'll fire you too. So, we're all adults. We're going to be as responsible and as caring to you as you will to us, right? And if it doesn't work, that's fine. We'll part as friends, right? And that's the best way to do it. I've been in this industry so long, and I've seen, good relationships end bad simply because of fine print, and that's why we don't use fine print. It's a 30-day time window. That's all it is. No steps. No, don't sign up if you're not going to come to my live sessions. I'll tell you that right now. You won't you won't maximize your experience if you don't go to the live sessions. So good question. The signals come out between 7 and 9 o'clock Eastern time, between 7 and 9 the day before. So you have all evening and the morning to set up your trade. So let's say it goes out at 9 o'clock. You have 12 hours, 12 and a half hours before the market open. You want every trade set up before the market open, because that's typically where we get filled. We get filled in the first 5 minutes of the day. 90% of the signals will trigger in the first 5-10 minutes of the day. So you just want to be set up in advance of that. So that's why I love this method, because this is how I trade all the time. I don't trade intraday. I would say 95% of every trade I've placed in the last 5 years has been after market's closed. So you got plenty of time, full-time jobs that will not deter you from setting up your trades. Yeah, so we run about 68% win-loss ratio. Of that, average profit is when we win, it's about 72% is our average win. Average loss about 35% when we lose, and that's over 290 trades across all the signal services. Is where those stats come from. All right, so what we're going to do, because we just ran out, we got people wanting to sign up, we've added 5 more spaces. So there's 5 more spots to save the $50. So I just got word from Alan, he's helping moderate this. They've added 5 more spots for the MAT 50 special. So if you didn't take advantage of the first 10, that's okay. All right, now we have 4 left. So I'm getting this live update right now. So we have 4 left now. So we now added, we went through the first 10, went through the second 10. Now we've got 5 more. One of those is gone. Okay, now 2 of them are gone. We got 3 left. It's just extra money for you folks. I mean, like I said, just one of these signals would pay for this already. Doesn't take much to recoup this, right? So, and then at that point, you're in the green and you've got an entire year ahead of you. We're set for the next little bullish pop here. So there's going to be plenty of opportunities here to go out in the next couple weeks. Looks like the support level's holding on the SPY, which is good. That's going to open the door for a lot of moves back to the upside. Opens up a lot of signals. Let's not let this correction pass us by. I'm not going to let it pass my traders by, and I'm definitely not going to let that pass you by. So make sure you're on top of this. We got 2 left now. If there's any other questions. So okay, so here's a good question. So a question just came through. The question is about setting up the option trade. So effectively, I'm going to give you the entire roadmap. Okay, what to click, what to input into your brokerage account. So you're going to be able to see it all. You remember that you get the copy of the ticket. Okay, so you can see precisely how we set it up. This works on Interactive Brokers, Charles Schwab, Fidelity, obviously Thinkorswim, Tastyworks, it works there. I mean, if there's any questions on your specific account, bring it up in class, because I don't just do the teaching. My traders are highly engaged. They're into the markets, and I would say in a given session, and they're about 2 hours. So these live sessions twice a week are 2 hours on average. I learn just as much from our clients as they do from me at times, right? So if you have any questions that I might not be directly familiar with, I guarantee one of my traders in the room will know the answer to that question, especially when it comes to specific brokerage accounts. So rest at ease there. If more than likely, if there's any situation you come across, I've seen it. If I haven't seen it or have experience with it, I'll find it for you. So I'm humble enough to know I don't know everything. So bring all those questions. That's why it's live. Just like this is live, you're asking questions, I'm answering questions. This is what we do every single week. Let's see. Yeah, you shouldn't get that. Try this direct link. You shouldn't get that error. Try this direct link to the checkout page. Here, let me send this to you. If you're getting that pop-up, copy and paste this link I just sent to you. Try that out. So it's a redirect. We keep the, rapidprofitsmethod.com is a redirect to our checkout page. So sometimes the redirect, depending upon your firewall, will give you that type of warning. So, use the direct link. But I flagged it too, so my team will see if they can help you as well. Let's see. You need a phone number? Let me grab it for you. Alan, can you drop in that phone number? Please help moderate this. If you have any questions, you can email us at matt@concordiafinancialexchange.com. That'll go to our support team as well. Yeah, good question. So we got a question coming in about management of the signal after the fact. So out of the gate, we send you the full details. If there's any changes to the signal, meaning let's say we're in a buy position and I'm anticipating us running into resistance, I'll send out an alert saying, hey guys, we're going to close this trade out early. And I'll send out the full details of it. None of this has to be market order. You know, whenever you get to it, you know, it means close it out by the end of that day. So that way you have plenty of opportunities to manage, but it doesn't happen often. But when it does, it's because of a resistance point, or I'm expecting us to pull back. So I'll send out a notice saying, hey guys, close out this trade. Good question. We got a question from Luis. What is average cost per trade? So coming in, I'll show you what we've done here recently. The typical pricing, if you look here, so this is just the RPM, but we've got tons of data. You know, this other signal service, we have 240 trades in. So the average entry price or premium price is $2.83. So $2.83 of premium means $283 coming in, right? That's one contract, is 283. Here recently, yeah, same thing. I mean, you've got very small pricing here. I mean, entry pricing average here is 238 too. So I try to keep them under $500. $500 a contract, so $5 a premium. Yep, no worries. Yeah, so we do, so question on the premiums, on the types of entry. So we do at the money, we'll do out of the money, and then we'll do in the money. It depends on the specific stock that we're trading. Sometimes it's better to go out of the money if we're looking for a strong move up, high implied volatility setup, then I'll send you out an out of the money option. Those typically get some strong percentage moves, triple digits, but it's not for every scenario. So we'll talk through that, teach through that, but you'll see the signals where you see out of the money strikes. But we're on both sides. Yep, good question. All right, we'll give you a call. I see you're having errors with the checkout page, so I've got you flagged. We'll make sure someone reaches out to you to help you sign up. All right, so I'm just going to review the question, but I think I've got all the questions answered here. Yeah, I haven't missed anybody. All right, perfect. So what's important is that on the first email you get, okay, so you should receive your invoice. You should have your welcome email to take you to the membership site. Make sure you have that. Let us know if you don't have it. We'll resend it to you. So check your spam. Unfortunately, you know, we can't control where it goes. Could go to your inbox, could go to your spam. If you don't have it by now, you should have it. If you don't have it, check your emails. Make sure you have the welcome email. It'll come from Concordia Financial Exchange. So look for that in your inbox if you don't see it right away. If you don't have it, let us know now in this question section, and I'll have my team resend it out to you. We can't control, you know, it's amazing what the Yahoos, Gmails do. If you're curious if they do restrict what you see, it is a fact. Okay, so even things you want to see, they don't send it there. They don't allow it to even go to your inbox. So make sure you check it. Make sure you add us to the safe sender list, and then make sure you sign up for SMS. So the first email you receive with your trade details. So today's Tuesday, so we'll have one coming out tonight more than likely. Based on what I see so far, there should be a setup that goes out tonight. So you'll get your first signal this evening. When you get that, you'll see on the top of the email, it'll have a opt-in for SMS. So make sure you opt in. We can't opt you into it. So make sure that you do so if you want to get alerts to your phone. That's if you want the SMS. If you don't want the SMS, that's fine. But I want to make sure you know what to look out for. It'll look like this, so you know. Let's show you. So this is what your alert looks like for the RPM, rapid profit method. This area here, see if you want to receive SMS, make sure you click here, opt in. This will take you to the opt-in for SMS. Like 90% of our clients have SMS, so that way you get it right to your phone. All right, good question on the text message. Yeah, it's available around the world, so it's not just a US only alert. All right, perfect. So based on this, I've got everybody, all the questions answered. Look, you're going to have more questions. I get it. That's what that live training in our Market Pro Live session is all about. I'll be back with you there at 12 o'clock on Thursday. Okay, I'll be back live there. You'll be registered automatically. You don't have to worry about doing it yourself. So you'll be registered for our twice a week live Market Pro Live sessions. Okay, so that's Mondays at 7, Thursdays at noon. And then everyone should have your invoice. Everyone should have your welcome email from us. Once again, if you don't have it, let us know. We'll resend it. But at this point, it looks like everyone's taken care of. I see all the notes. And at this point, look, I'm excited to have you join us. We only do this every so often, a couple times every few months. So I'm glad to have a new batch, and I'm excited to work with you. So with that being said, happy trading to you. Appreciate the time. And let's go capture some profits. Thank you all.